Hello, welcome to today's stream. Today, you've just got me today instead of Kieran. So what I'm going to do is I'm going to wait till we get a few more people in the live. And what I'm going to do is continue on from where I left yesterday, because yesterday was a bit of a nightmare. So just bear with me while we get a few more people in here, and then we can take it from there. I just need to figure out how to share it to the Discord. How's everyone doing today anyway? We all good? Awesome. Okay, we'll just get started right away then. So yesterday we were going over this system here, and it was just a simple taking the momentum of Friday, taking the breakout of Friday momentum. So looking at the past 4 bars and then taking the breakout on the Friday. And for some reason yesterday, my MetaTrader just was not playing ball. So I've had to refresh it today and fix everything. So it took a little bit of time, but we're actually there. So yeah. We're going to go over like some of the statistics for it at the moment anyway. Like I'm running a back test in the background, I believe, at the moment. So we do have this system currently testing on gold. So yesterday we didn't get gold to be profitable, and we're going to see if we get it today, but it doesn't look like it's much different at the moment. One little iteration that I did make is in the condition block. What I did is looking at yesterday's high, so Thursday. We don't want that to be the highest high of the past 4 days. There's just a little, these are just things that I like to play around, but just to kind of see where is the edge. So is the edge coming from, yesterday is higher than the past 3 days and we're taking the breakout, continuing the momentum, or is it not, essentially? So what I'm doing is right now is testing to make sure that we're not taking the breakout. We're taking the breakout of the past 4 bars, but only if yesterday was not. So I could probably go to TradingView quickly and show you what I mean by that. Let me try get an example. Yeah, so like, let me pull it back to, nope, wrong date. But anyway, should be okay anyway, just to kind of give a sort of rough idea as to what I mean by it. All right, okay. So basically, hypothetically, let's say today's Friday, this is Thursday. We're looking back Thursday, Wednesday, Tuesday, Monday. And was Thursday the highest high? No, it wasn't. So the breakout would be here and we'd then take the trade. Whereas let's say that this bar was above this bar, then it would be like, hypothetically, let's say that is that, then we wouldn't be taking the trade. So it's just to kind of see, are we taking a breakout of sort of like a fractal level? Or are we taking a breakout of, it could be like here, which is not a fractal, but as long as it's not like we're taking a breakout of something rather than we're just continuing on from yesterday's momentum. So that is the sort of little change that I've made to this system to see, is the edge in the breakout of like a fractal, or, as I've said, or is the edge actually in taking advantage of yesterday's momentum? Yesterday was the highest high of the past 4. And then continue that into Friday. So that's simply what I've been testing on this one. I've been doing a few little back tests in the background as well, which we can actually go over if you want. So right now we have, so this system is on NASDAQ, and literally it doesn't, this is the problem with this sort of system. So what I was wanting to do yesterday was really try and take advantage of, let's say we've got a high amount of trades, taking advantage of different management styles, but I only got like 40 or 50 trades over, I think that's what, 8 years, eight to 9 years, which just it's insignificant data to start sort of like categorizing it into like times. Some of the managements might not work as well. So in a future episode, we're gonna build a strategy that's taking a lot of trades, so then we can really dive deeper into that. But for now, we're just going to make it simple for essentially the first month, so that people can get a hang of FX Dreamer, sort of build alongside me, and then we can get into more advanced stuff as time goes on. Because I'm pretty sure that some of you will be already building on FX Dreamer and starting to get to grips with the concept, whether it's FX Dreamer, Perfectus, or whatever sort of no code that you build, or maybe you build your own code. That's completely up to you. But you'll start to want to build and like broaden out, which we'll get into that in episodes to come. But these are the results for the NASDAQ strategy. And you might be looking that the results are modest. So we've only made a 2% gain since 2018. Now, what we can see was there was only 56 trades. So not a lot of trades over that amount of time, but we are taking just trades on a Friday, and we're only looking to trade on that Friday. So that's obviously going to limit the amount of trades we're getting. But this is simply the system. It's a 1 to 2 risk to reward at the moment. So risking 1% to make 2%. In this case, I stick to my usual. Some of you people probably know already. I normally risk 0.1% per trade. So this is something I'd look at using the 0.1. So that's what I've done here. Risking 0.1% over 56 trades, we've made 2.29% return with 0.5% drawdown. Now, right now, this system would be probably sitting in like a secondary account for me, because the average yearly return is 0.3 and the drawdown is 0.5. So for me personally, I want the average return per year to be higher than the max drawdown. And that's just simply for recovery reasons in portfolios. Like, we don't want to be in stagnation, and we don't want to sort of have a system that is going to outweigh drawdown in terms of returns each year. But then again, this one would be borderline. I'd have it in a second Darwin for me personally. So it's going to go in the charity Darwin because it does have an edge. The profit factor is really good. And we're going to try and get probably about 4 or 5 different systems on it. Can't see share screen. Okay, 2 seconds. Nobody can see screen? My bad. I thought I was. No, it says that I am. Can everyone see that now? Apologies, it's first time using StreamYard on my own. I will be better as time goes on. Let me see if I can sort of move that. Okay, is that better? Apologies, I've just been rambling on explaining statistics without people knowing. Apologies. Yeah, now you can see what I'm on about now. So, yeah, I'm not going to waffle on again on the whole thing, but yeah, this is the equity curve to this NASDAQ strategy. You can see just over a 2% return, drawdown is less than 1, and the statistics are here. So 56 trades, 1.74 profit factor, 0.5% return. So this strategy will be going in the charity Darwin. I do believe I had another one for oil. Now this one is not as good, but let me get rid of the NASDAQ one first, and then we can just go over the oil one. Is this the oil one? Yeah. So this is the exact same system with different sort of ATR multiplier. So I think this is a 3 times 1 hour ATR stop loss, again with a 1 to 2, because we're just going to make it very simple to begin with, 1 to 2. And again, there's a lot more trades. We got 117. No, that would be wrong. Let me reload this and upload it, because it says it's only 61 trades. Yeah, so this is the system for oil, and the returns are not that great. So I'm going to do some work on this over the weekend to see if I can do anything with it. Because right now this one might be added just for just a starting point, and then as time goes on we might remove it from the charity, Darwin, because there's an edge, like 1.45% profit factor at 61 trades. Again, it wouldn't go in my main account like IME because, again, 0.22% a year with a 0.71% drawdown. So right now that's not what I would be looking for. But the problem is it doesn't trade enough. So right now, let me know if you can see the MetaTrader. Yeah. Okay, awesome. So I've just been running that exact same back test on gold, and the settings, just ignore the pair traded because that's a constant string that attaches at the final stage. Don't need to worry about that. So again, risking 0.1. What I'm doing for this optimization is multiplier between 1 and 6 in steps of 1. So we're going to test the 1 hour ATR times 1 hour ATR times 2, 3, 4, 5, 6. And then what we're doing for TP, take profit, is we're testing from 100 to 500. So we're testing a 1-to-1, 1-to-2, 3, 4, and 5. And what we're going to do is try and see if there's an edge in holding the trades longer, going for that bigger target, or does it not, does the move not continue very well? And so far looks not too bad. Lots of things profitable, which is good. What I'm going to do is I'm going to see them. So what I would do is I would arrange it by multiplier here on the right. And what I'm trying to do is kind of find that sort of safe range as such. So we can see in the 1 multipliers, right, we've got quite a few negative results. So I would be looking at that. 2, we're starting to improve. 3, it's not too bad. Again, this is what I mean by how far does the move go. We can see a 1 to 5, we're only getting $500 profit, where a 1 to 1, we're getting 1,400. So it's clear that the edge doesn't last very long in terms of for bigger targets. So on gold, I would be then looking at, okay, where can I maximize my target but be in a safe sort of range? So we can see 1 to 1, 1 to 2, 1 to 3, and then at 1 to 4, we can see a massive drop off. So I would be probably putting it between 200 and 300. So maybe like a 1 to 2.5, just to be within that sort of safe area of being able to, just to kind of make sure it's in that safe working range for targets wise as well. I do the exact same process for stop losses. So what I'm looking to do is just find a good range that's, I would regard, robust, safe, that you could throw it in different market conditions. Whether it's we could increase. Sorry, what return percent / drawdown do you look for 2020 in order to add it to the portfolio? So to be honest, with that, it all depends on average return against average drawdown. So as long as it's about 1 to 1, so let's say the average return per year was 0.2, but if my max drawdown was 0.2, that's still fine for me to add to the portfolio. Again, 1 to 1 is fine to add to the portfolio. Anything above is just a bonus, and you do get some of those systems, and they're really good, but they're quite rare to come by. So the way that I've built the portfolio is I've got my main sort of strategy. So I've got my go-to on dollar yen, and that trades quite a lot. And the return is quite decent. So it's 2 to 3% a year with maybe a 1.5% drawdown. So it's really, really good. But what you need to do as well is some of these strategies, I wouldn't compare your main strategies to some of these, what I would class as subcategory strategies, because it might trade a lot less, and it is, as long as it has diversification and the correlation is really good, it's well worth adding a lot of these smaller returning strategies where to fill those gaps when your main sort of strategies are maybe underperforming. So there isn't a set return percentage to drawdown, but 1 to 1 is as long as it's a 1% return, to 1% drawdown a year, averaging. I find that good because let's say you do an 8-year test, you've got an 8% return with a 1% drawdown. It now seems a lot better from the return to risk sort of profile. So I hope that answers the question. If you've got any others in terms of like questions for that, then do feel free. But we'll jump back into this anyway. So we can actually see like some of the, where is the best results? No worries. The best results are around the 656 multiplier. So let's have a look at 6, 5, and 6. So 5's there, 6 is there. So 5, you can see the biggest profit is 1 to 2. Then we see a massive drop off again for 300. So again, if I was to choose that one, I'd go between 100 and 200. The downside is, let's compare. Again, it's very important to kind of, you can get caught in the rabbit hole, but I'm very strict in the way that like I'll like pick a stop loss or like pick like a certain like thing. I want to make sure that it's robust. It can be very easy to like look, okay, this is the best profit. Let's trade that. Like you could do that, but then what I would say is do not expect the exact same results. You're not going to, in the next 82 trades, it's probably not going to be the exact same profit to draw down. It's probably going to be worse because, if you think of an expected value on a curve, it will go above and below. You're trying to pick that one that's sort of in the middle, that's sort of like, just in between. So as much as 6 looks good, I would need to test the 7 multiplier the other side as well. So I'm just going to pick a level that I see as kind of robust. So the worst 1-to-1, that's fine for 1-to-1, that's fine for 1-to-1, and that's fine for 1-to-1. So based on the 1-to-1s, like 1400, we've got 1300, and then we have got 1500. As much as this is like the worst result, it's within a good margin for the multiplier. So you've got one ATR each side to play with, which if you pull up your ATR and look at it, that's quite a lot of distance. So if we were to bring up a chart right now, let me just cancel this. Apologies, ignore that, it's just a trade that I'm in. So let's say that it worked in a 3 ATR. So 3 ATR is 195, so 600-ish. But it could also work 300, so 600, 800, 1,000. So let me just get to that. So like the entry, between your entry, your stop loss, and your 2 stop losses, you've got a good range of roughly 0.25% or 38.7 pips worth of like movement between your like where your optimal and your like less is. So somewhere in between is pretty good. So it means that market could move like extra sort of 38 pips north, 38 pips south of your stop loss and still be within that sort of like safe area. I'll need to think of a better explanation to say it because this is just the way that I've been developing systems for years, but I hope that kind of comes across as to what I'm actually doing. So let's continue with gold and let's pick 4 as our multiplier. Now, the interesting thing that we can explain later with gold is in the Discord earlier, we got a question regarding minimum lot size and on like gold and like silver. I've experienced it with myself right now as well. So like, because I trade a classic account, I'm trading my own capital, and because I risk so small, I've been starting to get priced out because ATRs have been moving so much in gold. So my position risk size has been bigger than what I would like. So even on a 100K account, which would be crazy to think about. 100k account, we are still going to struggle to push 0.1% risk with a 4 times multiplier with the ATRs of last week or the start of this week, because those moves in gold and silver were crazy last week. And if anyone took advantage of them, well done. But I kind of stayed clear of it last week just because I was just going to get risked out. But yeah, that's something to definitely take into consideration when you're doing your back testing as well. I don't know if Kieran's previously mentioned it before, but on Quant Analyzer, let me see if I can bring up Quant Analyzer. You have on Quant Analyzer, you have a list of trades here, right? And it's very important to kind of, when you're doing a back test, to look through these is to, okay, was there a time that my risk went massively up on the account? Because the worst thing that can happen when you're trading some of these things live is you'll have algos set, it'll trade overnight and its risk, say 0.3, 0.4% because of ATR. If you're using ATRs and you're using low risk, and you'll be thinking, oh, this is crazy, this has maybe not happened before. Well, it's very important to go back onto your back test and like look back, okay, has risk actually increased at any point over time? And how did it affect my drawdown, or how did it affect my profit? Because what you can find in your back test, you might see massive jumps in profit, or you might see massive jumps in like losses. Go to the cumulative the profit and loss percentages here. If you risk 0.1, it will be roughly 0.1, give or take swaps, commissions, etc., etc. But if you see like a minus 0.5% here, you have the date that you can go back to and look at. So it's very good to analyze these sort of things and digest them. So we're looking at what happened in that event. Was that to do with, was it a gap over the weekend, or was it to do with the ATR stop loss? And there was occasions, if we think back to 2020 when COVID hit, we see massive explosions in price, especially on the ATRs for some of the currencies. So some of the strategies I had, if I put it on a £5,000 account or a £1,000 account, we'll see the profit and loss losses or wins get bigger because it's forcing minimum lot size and forcing positions to be bigger. So that's one thing to take into account when you're building strategies and putting into portfolio, that if you're wanting to equal weight risk, make sure all the trades are equal weight risk. Now, to counteract that, in the Discord earlier on, I did put a sort of custom filter that you can apply to your systems that will calculate the lot size based on ATR. And if it is below the minimum lot size, and it will not take the trade. So if you want to take use of that resource, do head into the Discord. I did put it in there, and it is a very good tool to manage risk in that regard in times like this. Because the one thing you don't want to do is get caught and you're taking a 0.5% loss or 5% loss, and your multiplier goes haywire on Darwinex, or if it's your own normal trading account. So well worth looking into these sort of things. One of the biggest things that for me is risk first, risk management first, everything else after. So I will have so much risk management in place, whether that's like, say, like spread blowouts, whether that's like, if we see, you know, I don't like to hold trades too much over the weekend. So if I can see like there's massive edge in holding over the weekends, I will, but in most cases I won't, just because we don't know what's going to happen over the weekend. We cannot do anything from our end in buying or selling or getting in and out positions. So normally I don't want to take that overnight risk, but that's because most of my strategies are from a day trading approach anyway. So some of you might be swing traders and your stocks are massive, that it doesn't really matter too much. But just trying to share as much information as possible from my end and what I've learned and experienced. So yeah, I keep getting sidetracked from this. Apologies. But we can see that the difference between a 1-to-1 and a 1-to-2 is literally a couple $100, but we're doubling drawdown. So I'm gonna probably stick with a 1-to-1 and a 4 multiplier for this chart at Darwin on this if the results are good. One thing I don't want to see is I don't want to see all the results in 1 year, because the odds of that happening again, if we've done it for 8 years and all the returns coming in, 1 year out of 8, the odds again are even lower, and it could just be a complete freak. So we're going to run this. Apologies if it's taken too long, because unfortunately I live in the sticks up in the north of Scotland, so sometimes connection cannot be the best. Let's see if we can run that. Busy. Right, anyway, what is the market doing at the moment anyway? Because I suppose this is meant to be a market overview more than anything, but I was just giving an update on what I'm doing behind the scenes for the charity Darwin, because I think some of you were maybe left a little bit yesterday, so we can go over that. But yeah, it's good to see that gold has died down in terms of the daily volume volatility, and silver. But again, this goes back to my point. That's crazy. Just look at the ATR blow out there. So last Tuesday we've seen the ATR double, which is quite crazy, because it doesn't happen too often. So if we go back, we look at how this is what I mean by you need to protect your positions, and having if you're using an ATR and a lower percent risk, you need to cover yourself, because we have not seen ATR. Yeah, so 2025, if we take away 2025, the peak was 2020, and we are so much more over that. What's that, 4 or 5 times? Yeah, crazy. So from a daily perspective, we are seeing some crazy moves at the moment. But I think, good to see that since Friday, opening this week, Monday, Tuesday, we can see that the ATR is dropping, which is good, meaning that less people will probably have problems. Hopefully, I'll not have problems getting in and out of positions on gold or silver now. Maybe silver a bit more, because contract size is higher. Yeah, maybe. Oh, system's done. Ooh, okay. Bit different. I mean, it's not the worst. Let me export this and let's see if it actually helps the charty Darwin. So gold. So let's see if that actually helps it. Okay, it doesn't really. So 0.4, 0.8, and then let's add in, so that's still oil. Let's add in the NASDAQ one, and let's see between it all. I think I've still got to put in the charity one here. Okay. So getting somewhere now. It's not too bad now. So yeah, 1% drawdown, not great. But 0.71 average per year, 5.61% return with 1% drawdown, 1.64 profit factor over 200 trades. So it's not the worst so far. Let's have a look at year on year. So 2024 right now is negative, but the rest is positive. Let's see if we can add Kieran's. I think there was still 1 or 2 systems that I wanted to check out on this strategy anyway. I believe it was Aussie dollar. So in the meantime, I'm going to run that in the background, but we can analyze how the charity Darwin's going to be looking. Okay, so I'm just going to add Kieran's strategies. The one thing that will be clear is Kieran's strategies and quant analyzer is going to be miles better than what we've been developing the past day or two, because it's definitely a lot more of a sophisticated sort of software that I have only just started to try out, learn, and get to grips with. So hopefully more in the year, you have me speaking about Quant Analyzer as well, because I do believe using both sort of approaches. So Quant Analyzer is going to be more hands off. You're just feeding it criterias and trying to break it again. Whereas I feel like FX Streamer is going to be more sort of customizable in terms of like you're putting your own thoughts and feelings into how you perceive the markets for price action, indicators, sessions, things like that. So definitely a good, using the both of them together could be really good. So it'll be really interesting to see how the results go. Right. Okay. So right now we've added these systems. Kieran's getting absolutely heaps of trades here. So right now we're at 1,933 trades, 1.71% profit factor with a 1.2% drawdown. And now the returns are 3.91% with a 1.2% drawdown. So now we're actually like, even though it's a portfolio, it's getting better. It's already getting good from a sort of like return, 36.34% to drawdown ratio. So that is getting crazy good already. Win rate pretty good as well. So this is what we're at, and my aim is we're gonna get probably, I don't know how many strategies we're gonna aim for, but probably something along the regions that we'll maybe get up by the end of the year. We might have 100 strategies on, which would be crazy to see how it's all working together. It will give you guys a sort of like background into, how does the daily volume look like? How many trades are we taking a day? How are the swings? How are we managing risk? Because as we add more systems, we might have to change some of the risk parameters on some of the strategies. We'll also need to look at maybe if some of the strategies are overlapping, how do we sort of not like stack the exact same order on top of each other, or if we do, can we change the way it's managed, or the sort of like, we might have one that's like a negative risk reward, might have one that's a bigger, longer term targets. So that could be quite interesting, and it's going to get. I think the sessions on Tuesday are going to get a lot more interesting as we add more strategies and as we dive deeper into more portfolio management rather than building, because that's what you want. You want to get to the stage where you're more worried about managing your portfolio than the actual individual strategies themselves. Because eventually, if you do stick at it and you use the resources, and you do have some ideas that you can put into FX Stream or Strategy Quant, you will get strategies. I think it's quite good that we're in that sort of era that we can completely take advantage of softwares like Darwinex. Sorry, not Darwinex, FX Streamer and Strategy Quant to get us to that profitability stage probably quicker than what we'd do manually. Like, I used to do manual trading for my first three or 4 years, and the first 2-3 years were painful, and I did actually get profitable after probably about halfway into year 3. So it did take quite a while, but from that, I was only profitable because I had a mechanical set of rules, which is basically what an algorithm is. So I was treating myself or trading like as an algorithm. So it kind of made sense for me to make the jump. Do you prefer strategies that take a lot of trades or fewer trades? Is there a thing as too many or too few trades from a single strategy? I have systems that take a trade every day, and I have systems that take a trade once a month. It kind of all depends. Like, what I want to, if a system is taking a lot of trades, the problem you will first encounter is commissions. That's going to be the biggest. You might find there's like, if you take away commissions, you can find loads of strategies that have got an edge. As soon as you add commissions, they're just a gold mine for brokers. They're absolutely rinsing the commissions. So it all depends. Like, if you've got if you've got a system that's taking a lot of trades, you're going to struggle to get the profit factor probably higher on it than something that trades less frequent. So something that trades once a month might have a high profit factor over 2. Something that trades every day might have a profit factor of something like, I don't know, 1.3. I think I developed a strategy yesterday morning. Let me see if I can find it. I think it's here. Yeah. So this is a strategy that I developed on Monday. And it does take quite a few trades. So we can see that this has got 611 trades since 2018. So 1, 2, 3, 4, 5, 6, 8 years. Let's see what they are. So yeah, we can see it's like trading quite a lot. So, 83 trades last year, 86 the year before, 79, 67, 66, 77. And yeah, like there's no problem with having strategies that trade a lot, but you're going to struggle with commissions. So this one's actually got a really high profit factor of 1.48. So again, this is why I think I mentioned in the one, like I try and stick to 1%, but if it's a little bit more, like 1.27, it's not too bad. We can see that the return to drawdown is slightly negative, but I've not put this system live yet, so there's still a few things that I need to have a look at before turning it live, and it will probably be that 1% return to 1% drawdown by the end of it. So I think as long as the metrics are good, and you've not like over optimized it, and you've kind of thrown everything at it to try and break it, it doesn't matter whether the system takes a trade every day or a trade every month. You just trade the edge as long as you're putting in part of a portfolio. So like one of the systems that I have an IME, it trades every day, but I risk less than what I would on a lot of my other strategies, just because if I risk the exact same, it would maybe make the other strategies kind of irrelevant, if that makes sense, because the average, if we're taking one trade on each of them the rest of the month, I have to 20, 30 on another one. It doesn't matter if I'm having a bad month on that one strategy, it's kind of making all the other gains, if all the other strategies were positive, kind of disappear. So this is what I mean by when we get into the portfolio management, it's going to get really interesting into how we're going to manage risk. And this is an example of it. So we've got this system here that's traded 611 times. Then we've got this system here that's traded 56 times. So potentially what I would do on this system is I'd potentially double the risk. So it's getting that sort of 1% drawdown. But then again, it might not make sense at 0.24. I would need to find good examples. I don't think I have it on this computer to show you, but it's maybe something that we can look at a different week. But yeah, so interestingly, on about more strategies is this strategy as well. This is the exact same strategy, but on NASDAQ. This one is ready to go in my eyes. We've got a 0.55% drawdown, 0.56% return per year, 6% win rate, 1.53 profit factor, 526 trades. So for me, this is like a strategy that I am potentially looking to implement from the start of next week. I'm just got to throw a few more things at it, and it'll be good to go. The downside to some of these strategies is the only thing I really don't like about this strategy is stagnation. 520 days. That is a lot of days under. Let me try and find the stagnation marker. Yeah. So this is a long time to be in stagnation, and I think this is why portfolio, like having a multi-strat portfolio is really important, especially for me. Is you could have back tested the strategy manually the past 3 years and think this is great, turn it on, and you go through that slouch period, but again after it like kind of explodes. But this is why, just because it's on a 520-day stagnation period does not mean that it's a bad strategy. It just means during that market condition or thing, it wasn't too great. But I think we could make an obvious assumption that 2022 would be the negative year because the DAX was down. NASDAQ was down. Yeah. So FYI, this is just a long-only strategy that only trades in certain periods. So how many trades are in 2022? I think there's something we can do to this anyway. Does it trade? No, it trades short side actually. That's interesting. But again, we can see short side's negative. So interestingly, we could probably just make this long only as long as we apply the certain settings. Like if you're going to go long only or short only strategy, I would kind of, because we don't know when something's going to go from bullish to bearish or bearish to bullish in market. Oh, what is happening? Oh, there we go. Not too bad. Yeah. If I was doing a long only strategy, I would only look to kind of like make sure that I'm trading in a bullish sort of market rather than just okay, that should make it work now. Yep. Cool. Yeah, so literally I've just made a live sort of change to that strategy because I didn't have time to take it further and have a look at it because I thought it was long only, but it wasn't. So yeah, we've now went from 5.2% return to 5.35% return. Profit factors increased, drawdowns decreased, average returns increased. So we are this one's actually looking pretty good to go. So I might actually apply this again. Stagnation period is poor. It's only reduced by 22 days, so it's not necessarily the best for that. But part of a portfolio could be good. We could even just put these two together, and maybe they counteract each other already. More lots, which you might have problems actually getting filled. Don't know why that changed again. So I always opt for something that's maybe like a 2 through. That's exactly the whole purpose of multi-strats. And you'll see if you go and look away at like last year's results for hedge funds, you'll see a lot of multi-strats didn't get the best results, but as well, that's not too bad. It's more my like test account. I don't know if I can get it up, can I? Which is all my best strategies, and then I then like 20%. I would need to double check what the ticker is, and then I can get it. So just bear with me, and we can show you that. Yeah, I think my internet might have dipped. So just for context, I had a power cut last night, and the internet's been dipping in and out today at times. So I was kind of hoping it was fixed, but it might not be. So if this disconnects at any point, I've not ditched you. It's just the internet's kind of went off. So yeah, apologies, because I can't even use the Wi-Fi. Check. Okay, it is back. I don't know if anyone can hear me. Yeah. I am probably just gonna. My internet keeps dipping in and out, so I think I'm unfortunately gonna have to just call it an end for today. Oh, you can hear me. Yeah. Okay. Awesome. Did it dip out and it just went blank for a minute, or could you still see me and see the screen? Because on my end, it just had that loading bar. Rob, yes, it is possible to build support and resistance strategies with FX Dreamer. I'm going to give a shout out to Max from Perfectus because screen was okay, sound was cutting okay. Max from Perfectus, I think next month, who owns Perfectus AI, is doing, I think, like a whole new build on support and resistance. So rather than learning from me, who is I'm not an educator, like I'm pretty bad at explaining things at times to times. He is probably going to do like a series on that, so it's maybe worthwhile checking him out. Unstable. Okay, it's happened again. Yeah, apologies. It keeps going in and out. But yeah, it is possible to build anything. And next week in Darwinex YouTube or yeah, okay. I think the wise thing for me to do is just kind of call it a day on the stream. So I can only apologize. Otherwise, I don't want this to keep coming in and out, and it'll be frustrating for not just you guys watching, but also me, because it kind of feels like, yeah, it's not good. Although I think I did. Let me check my speed. Yeah. Okay. I am just going to call it a day there. I'm going to apologize because my internet keeps dipping in and out.